Hello traders, and welcome to another weekend's market forecast video. Sorry if my voice is kind of irritated in the last 2 days, so apologies if I sound a little bit different. And that's also one of the reasons of the delay of this weekend's video. So regardless, let's start as we usually do with the dollar index. We are entering the last week of trading almost for the year. So we have Christmas during the midweek this week. So the market will be slow 1 or 2 days during the week. So we have been expecting the dollar index to start falling from this Fibonacci extension area. We have got it dropped, and then we have made a correction here for another push up from the FOMC. Of course, we have updated our members during this price action and the FOMC that even if we seen another push to the upside, this would still complete the structure of the dollar index, and then the bigger move is still to the downside. Of course, we haven't traded anything last week. This is the benefit when you are a member and you get access to our exclusive in-depth market analysis live sessions, and you also get our trade recommendations on time. So regardless of the case, the dollar index is at the peaking phase at the moment, so it should soon start this move to the downside, and we are expecting the dollar index to fall near November lows sometime within the next month or so. Alternatively, this week, if we are not ready to drop, then the market is going to still do something like that. It's going to be choppy, and from next week is going to fall anyway. For this move to the downside, we're expecting a break of the 105.4 area, which is the lows from December. So the next move for the dollar index should be to the downside. For the dollar yen, we have also had this extension to the upside due to the BOJ's interest rate decision, which they decided obviously to keep the rates low, so they didn't raise the interest rates once again. So we are entering at a similar stage like we have been here in November before we got this move to the downside. So the dollar yen should be getting ready sometime soon for a reaction to the downside. But of course, at this stage, it's not clear how it's going to play out. But the next reaction should be sideways to lower, but not the best pair if you are trading it. Of course, we have been saying that since the end of November at these levels from 150, we expected to have a decent reaction to the upside to 153, 154. So if you have been following us since then and you have took this buy from here to 153, 154, that was the move that we were looking for. So you have done well if you have done so. But of course, once again, that's the benefit of you being attending our live sessions and you becoming a member, because you are going to get all the guidance in depth and on time, so you don't need to be guessing in the market. So we are going to make another video during the next couple of days and explain to you our successful year of 2024 and many more things that are coming ahead. So stay tuned for that as well. So yeah, for the dollar yen, nothing interesting to note. It's getting ready to soon react to the downside, but at the moment it's not at a stage that we can be looking to trade in any direction. The direction was from here to here. We have got the move, and now the market is entering at the stage of choppiness, and then a reaction to the downside should follow. For the euro dollar, we have expected the market from these levels to trade higher to the 108 area. Of course, we have got our first reaction to the upside, and then we have done another corrective structure lower right here. We didn't break these lows, so as of right now, it looks like the euro, similar to the dollar index, should be getting ready to move to the upside and reach the 108 area, as we have been saying since the last 2-3 weeks. So this is the next move that we should be expecting from the euro from this point onwards. For the pound has also reached another Fibonacci extension area down here. It has made a lower low below the 22nd of November. Sorry, this is 11. So let's correct that. And we should still expect the pound to provide us with another move to the upside. If you have been following us for a couple of weeks, you already know that from this area we expected a move to 128. And after 128, we expected some reaction. This was the reaction that took place. So now the market should still provide support from these areas, and we should still see like a double bounce to the upside for the pound dollar. So the next area we are looking for is 129, 130, somewhere from here, and then we will see what the market does once we have traded to this area. Now for gold we have got a double correction also from this peak from the 22nd of November. We have been expecting the market from the middle of November to provide us with a move to the upside, and this is exactly what happened. And then we expected some sort of a pullback before the next move to the upside. This was the first pullback, then we had another push to the upside, and then we had a bigger pullback right here during the last 2 weeks. This was from the FOMC midweek last week, and now the market provided us with another possible pivot that we are expecting, and from here the market should provide us with another move to the upside. For now we are looking for these two highs at the 2725 area, but we are expecting a bigger move to the upside. So of course, if you are trading gold, you should be very cautious when and why you enter the market. The buying area was this one right here, and now this is the next buying area that we have seen during the last week. So from here we are expecting a reaction to the upside. So let's see what happens entering the next week and onwards. But for us, gold is still good for another cycle to the upside as long as we are above this low and this low right here. Now for oil we expected the market from here to give us a double correction to this area. So far we have got 1, 2, 3. We have got another reaction to the downside right here, but it looks very choppy and corrective to us. So as far as we do not go lower from this area, we should be good to go for another push to the upside towards the 73 area. But overall, oil is not a very good instrument for trading at the moment. As you can see, it has been sideways for the last 2 months, so it's kind of in a range. So anything really can happen, because it's still, for the bigger picture, it still looks bearish for even if it does the double, for another cycle lower. So this is the reason why you should be cautious if you are trading oil. So for us, this is not an instrument that we are willing to trade at this stage, which is at the moment. So we will need to see whether it's going to do the double higher or not. So then we can look for any possible trading opportunities in oil. Now for natural gas, as we have been expecting from the lows from the 4th of December, this was a buying area for natural gas. We expected the market to give us a push towards the $4 area. So this is exactly what is happening at the moment. So if you have been following us and you also have been a member, you know that this was the area to buy natural gas for the short term. So this is going to be a move towards, at the minimum, the $4.3 area. But it looks like we might have momentum, and the market can also do something like that, react from this area, and then make another push to the upside towards the $4.5 and $5 area. So overall, this is where we should be seeing natural gas soon, towards the higher end of the $4.5 and $5 area. But of course, it's not a straight line. But if you have bought from here, you are risk-free at the moment, and you can let it play out as we like to trade. So if you want, as I said before, to learn how to trade correctly, make sure you are a member with the link in the description. Anything you need, you can email us at support@roiforecast.com, and we'll get back to you within the day. So from this area, we are up at the moment 26%. in this specific move of natural gas, and we're expecting the price to go even higher to 40% even. So this is a big swing that we can look for the market to reach this area. So if you are not in any new trades at the moment, this is not the time to trade this instrument. So you should stay away and focus on other pairs instead. Now for the S&P, the SPX cash index, S&P 500, we have been saying from last week that the market is still bullish, but for trading wise, it's not worth to chase it higher because this was a possible scenario. So finally, we have got a dip in the market. So we are expecting the market to still remain supported. It's going to be a process of getting into the next move to the upside. We might also see a double correction. That wouldn't be out of the question before we move to the upside. So regardless of the case, this is still a bullish market and we are looking for more upside to enter our weekly Fibonacci extension and target area that we have been projecting ever since the beginning of the year. So from this beginning of the year, we expected the market to keep going up with the pullbacks and extensions higher. So the target area was above the 6K. So this is where the S&P should be heading to before anything else takes place. So for trading wise, this is an area of interest that we can see that we can have buyers and then the market to keep pushing to the upside. But of course, the risk to reward is getting smaller and smaller as long as we keep extending to the upside. So for us, we wouldn't be getting involved in the S&P 500 at this stage of the cycle. Lastly, for Bitcoin, this is an update. So as we have been expecting from 2-3 weeks ago, we have been explaining that the market should be entering at the stage of a process of a peak and a pullback before it goes higher. So finally, we have got this reaction to the downside, which we have been kind of expecting even from here to do a double. So now the market should be finding support from this highlighted area right here. It should get ready for an accumulation and another push to the upside to break the these all-time highs from 17th of December. Alternatively, we wouldn't be surprised if the market does a double. So if it does something like that before it goes up, that is still a possibility. So regardless of the case, the market remains bullish in the bigger time frames, and this is the next focused move that you can expect. So that's it for this weekend's market forecast video. So if you are new here, don't forget to subscribe. Also for everyone, make sure you leave us a like so we can actually reach much more traders and help them out with our content. So as I said, from the next week onwards, you can expect also more content. So we have a lot of things to start sharing with you and grow within 2025. But once again, for anyone who wants to take its trading and investing decisions seriously, you can consider joining our service so you can get all of our personal recommendations and ask us any questions as we go through the market in detail. We have also conducted the 2025's webinar, Market Forecast for 2025, on Friday for our members. So they know what we are expecting in 2025. It's going to be a volatile year. It's going to be another interesting year of trading and possibly a transitional year. So if you want to know what we are expecting throughout 2025 and you want to see our webinar, it doesn't matter. Even if you join now, you will still have access to all of our previous content and posts through BMC. So consider that we are entering a new year. So finally, you should also decide if you want to make trading or investing work for you the right way. Feel free to join us. We will make sure we give you as much value as possible and help you to become successful, like we have had a very successful year in 2024 for us and for our members, which you can check also our trade results that we have closed so far during the year. And we are looking for another successful year in 2025 using our unique methodology and system of trading and investing. So that's it for us. We hope that you will have a great week ahead, and Merry Christmas to everyone, with health and prosperity to you and your families. So we will see you in the next video. Take care.